let's welcome in Kavita Shirvaikar, the MD of Patel Engineering, our first management on the show. Starting with you, Kavita. Firstly, if you look at, there was a stable revenue growth of 12%, but higher costs did weigh on your margins and your EBITDA number. Could you explain which were these factors that led to higher cost, and is this some kind of trend that we'll see for the remaining part of this financial year as well?
So first of all, thank you for having me on the show. See, let me say this year, financial year has been a good start for us because first quarter Q1 we have achieved 12% growth in turnover and net profit margin. If you see, there is an increase of 55%. So overall, our balance sheet is also strengthened. Our debt position also has reduced by 75 crores.
Right, right. So you have an order book, as I can see, of close to 16,300 crore rupees. Then why the revenue guidance is so low at the project revenue growth guidance is so low at 5 to 10%? Isn't this too conservative of a guidance?
So let me tell you, this year also our target is to cross 5,000 crore plus turnover. Our order book is 16,285 crore, and over and above we are L1, which currently we have received the LOI of 240 crores, which is 16,500 crore. Book to bull ratio, if you consider 3.5 times. So we are saying ki conservative side, we are saying ki this year also our target is to cross 5,000 crore. And it demonstrates our stability, steady growth, consistency in execution.
Okay, Kavita, this is Anushi joining in as well. Just about the order book, you have a target of reaching the levels of 25,000 crore by the year end, and this is with expected inflows of around 8,000 crore. Just want to understand from you, are most of these new inflows that we are looking at is from the hydro project side of the business that we are going to be seeing? Just want to understand the overall outlook coming from this segment, and is the expected contribution to remain in the 60% of likes?
So I'll tell you, see, let me explain you. Our 16,000 crore order book is divided between hydro, tunneling, civil and other infrastructure sector. So out of that, hydro is 60%. Now with Indus Water Treaty, government is more focused on hydro and renewable energy. So now let me tell you, some of the projects which were stuck at long time, now the approval is expedite. Government is completely focusing for speedy execution and taking out new projects. Let me tell you, NHPC, our major client is NHPC, NTPC, NEPCO, all large players, Central PSU. So their NHPC itself around 10,000 megawatt, which will be come up for bidding in near future, even SGVNL. So our focus will continue to remain in hydro, irrigation and tunneling sector, and selectively we'll look into other sector as well.
Kavita, what were some of these delays that we'd seen in the earlier quarters in terms of where the hydroelectric segment was concerned? Was it from the government side? Just want to get an outlook in terms of that. And is this execution risk, which was there before, is behind us now?
See, let me tell you, hydro, what are the risks we face? Because sometimes we observe that there is a delay beyond anyone's control, unnecessary delay in the project. Now, first thing, let me tell you, there are 2, 3 factors which was, reasoning to for the delay of the project, like environment clearance, land acquisition, other factors. Now, the government also is focusing and considering to resolve these issues. Unless and until 90% land is acquired, they are not issuing the LOI. So let me tell you that going forward, we will see the timely execution of the project. Let me give you example. Subansari, largest hydropower project, 2,000 megawatt, which is in Arunachal Pradesh, we have timely executed, completed around 2,000 crore revenue in 4 years. So these are the benchmark projects. Like last year, we completed our tunneling project, T15 project, successfully, timely completed. And the year before, we completed Sela Tunnel, which was in difficult terrain, 13,000 feet high. With commitment and dedication of our team, we have timely completed the project. So now going forward, we will see these issues have been taken care and there won't be much delay in the execution of the project.
Ma'am. Ma'am, on the balance sheet side, if you look at your debt, it has been around 1,500, 1,600 crore rupees. Any plans of debt reduction in FY26, if you could give us some number on that front?
See, as you have seen, we have been consistently reducing our debt year on year. This year also, our target is to 150 to 200 crores through monetization and claim realization. First quarter itself, we have achieved around 75 crores reduction in debt, and accordingly, our interest cost also has reduced considerably, and our net profit margin has improved. Considering our strong financial position, our rating also has improved.
Okay, so this is in terms of the debt picture that we are seeing. Also want to understand on the net working capital side. Now, if you look at the last two quarters, FY25 and the first quarter, it's remained in the range of 169 days or so. Do you expect further improvement coming here in the upcoming quarters? Just want to understand the picture over here. Along with this, are there any challenges which were there before in terms of payments coming in from the government side?
So let me tell you, as you have rightly mentioned, that our working capital cycle also has been improving consistently. Earlier it was more than 6 months, now it has come down to 169. Net is still 110 days. And going forward also, we strongly believe that it will improve further, because government also has taken various measures for realization of, taking timely decision, realization of claims, and paying contractors dues. So all these factors together, we see there will be further improvement in working capital cycle.
Right, ma'am. Just wanted to check with you on one thing. You're expecting 5 to 10% growth for FY26, and for FY27, your revenue guidance earlier was 15%. So, are you still confident you will be able to achieve that in FY27, or are you bringing that number down as well?
No, I'll tell you, considering overall the order line in pipeline, see, currently around 10,000 crore plus bids are under evaluation, and we are planning to bid around 40,000 to 50,000 crore projects in by this financial year end. So considering overall, and then next FY27 guideline continue to remain around 12 to 15%.
That's in terms of 26 and 27, the guideline that we are looking at. Want to also understand in terms of margins as well. Now, margins, from FY27 onwards, the expectation is to see further improvement going forward. For this current year, we are seeing about a 13% to 13.5%. Just want to understand in terms of, hydroelectric and tunnels, irrigation, all these segments which are there, which segment in particular enjoys higher margins, and what's your overall take on the blended margins going forward?
The overall blended margin which we are saying we'll be able to maintain 13 to 14%. Considering our existing order book and the future projects in pipeline, so we are, we are confident, we are giving guidance of we will be able to maintain this margin.
And any big ticket size order considerations that you have for this financial year? This is considering the hydroelectric space. There is emphasis in your note as well that there's limited competition over here. So just want to understand the overall opportunity which is there currently. If you are looking at your bid pipeline, that is about 40,000 to 50,000 crore, and this is with a success rate of 20 to 25% that we are looking at. So from this overall bid pipeline that we are seeing, what is the pie for hydroelectric segment in general, and what is the kind of expectation in terms of competition also from this particular segment?
So that 40 to 50,000 crore order book, let me give you, overall it will remain in the same ratio, like around 60-70% is hydro, balance 20 to 30% is water sector and irrigation.
And on the basis of that, if you can just give us the margins as well, the margin breakup.
Margin breakup, see, it varies from the project to project. It depends on the terrain, it depends on the type of work we do. So overall blended, we can see that hydro there is a high margin, irrigation there is little lower, and overall blended we are saying that we'll be able to maintain 13 to 14% margin.
Fair enough. And Kavita, my last question to you is about the order book. Now, if you just take the overall last couple of fiscals in consideration, in 23 you had reached a peak of around 21,000 crore. But from there on, we've seen decline in terms of where the order book is concerned. Just want to understand, why have we seen a subsequent decline in terms of the order book over the years?
So let me tell you, because of election year, order book was subdued. And now again, we have seen it has taken the momentum. It is like Patel Engineering itself. We have received LOA worth of 2250 crore in Q1 itself. So overall target for the year was 10,000 crore, and we see the momentum.
Thank you, Kavita, for joining and sharing that perspective on Patel Engineering. The stock in focus today, currently up over 2% in trade.